This is the single biggest story in the markets today. Dollar yen dropping by its largest amount this year. Now, this is due to verbal intervention. We've heard verbal intervention before, but why are we seeing such a big move? And it's because we had the Japanese finance ministries basically say this is the final evacuation warning. Dollar yen surged above 160.50 to its highest level since July 2024. Japan issued this verbal intervention saying that this is the final advisory if you want to escape, citing extremely speculative moves. And this is basically their threat that they have coordinated with the U.S. They've talked to the U.S. about this, and they could come in with physical coordinated intervention. Now, this is a 500-point move from top to bottom, and the question every trader has right now is, will this move last? If it is just verbal intervention, no. But if you take a look back at the last time we had physical intervention, which was in July of 2024, the last time we had a move up to these levels, let's take a look at the chart over here. This move actually lasted and led dollar yen to drop from basically 161 and change all the way down to 142. And that was because the Japanese government came in to physically sell dollar yen on July 11th as well as July 12th. So that's when they really came into the market. They sold dollar yen here, and that's what really triggered the move down. So what I'm trying to say is that verbal intervention alone is not going to be effective. They need to follow this with action. And right now they're telling us that there's a serious risk of action. And so this is the final warning. If dollar yen does not fall, they're going to come into the markets. And if they do come into the markets, yes, we could have this huge decline in dollar yen back below 150, back maybe even below 145. But if it's just verbal intervention and we see no action, then you're going to see buyers come in and dollar yen could find itself back up towards 159. Especially after the hawkish hold from the Federal Reserve yesterday. U.S. data wasn't terrible. GDP missed expectations, but still stronger than the previous month. Same story with personal income, personal spending, PCE deflator. So stock futures and stocks in general are trading very strongly. NASDAQ, yes, either at record highs or eyeing record highs. So the market is not bearish dollars. And so therefore, the Japanese needs to follow these threats with action in order for a permanent decline in dollar yen. I'm Kathy Lee with BK Traders. Have a great trading day.